Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first, I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is creating a strong uptrend, rejecting to the upside a quite strong historical monthly structured zone. This area was acting as previous resistance, preceding all these rejections to the downside. Then the market broke above the level with this impulse, and at that point, all that previous resistance was turned support here. The market retested the previous resistance turned support and is currently in the process of rejecting it to the upside. And that is exactly what you would expect the market to do, because if you have a strong historical resistance zone, which the market already tested and respected in multiple occasions, once the market breaks above the zone, all that previous resistance is turned support. So you would expect the market to retest the previous resistance turned support and then to create the rejection to the upside, which here is exactly what the market did. After that, we have seen a strong uptrend being developed. The market has been creating a series of monthly higher highs and higher lows, and so far the uptrend has remained intact. So let's keep all of that in mind and drop down on the weekly time frame. From a weekly time frame as well, the price action is quite clear. We can see a strong impulse. Then we have this consolidation pattern in the form of a triangle formation, or as others like to call it, a wedge. And after that, we had a clear breakout away from the level. And after a breakout to the upside, you would expect more bullish continuation. This is a quite textbook situation of impulse, consolidation pattern in the form of a triangle formation, and continuation to the upside. I'm sure you have seen this over and over again. So also here on the weekly time frame, everything is quite clear. Let's drop down on the daily time frame and see what we have. Now, from a daily perspective, I did speak about gold just a few days ago. I spoke about it when the market was around here. I explained all the reasons for which I was expecting this rejection to the downside. And in fact, that is exactly what the market did. And then again, I spoke about gold when the market was around this area, explaining all the reasons for which I was expecting this rejection to the upside. And again, that is exactly what the market gave us. And by the way, I will link in description those two previous analysis, so you can go and check them out for more free education. But at the moment, what do we have here from a technical perspective? Well, before we dig deeper into what we have there, first, let's go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing. Well, if we're looking at the data for the gold, the first thing that we have to keep in mind is that in the short term, net positions have been decreased. We went from 302k to 248k net positions, 243k net positions. So we have seen a slight decrease in net positions. What this shows is that in the very short term, institutions seems to be moving back to the bearish side for gold, adding 4,500 shorts with the last report and closing 13,800 longs. However, even though in the short term, institutions seems to be moving to the bearish side for gold, in the long term, the trend is very clear. We can see how we currently have 303k longs compared to only 59k shorts. So a huge amount of longs compared to shorts from an institutional perspective. So the long-term picture is very clear. Institutions are bullish on gold, but in the short term, it seems like institutions are now starting to move back to the bearish side. However, this data was preceding this stock market crash. And I will now go a bit deeper into why that is important. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you go and check out or follow me on my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So here in the daily time frame, as I was saying, this data is from before the stock market had a strong crash. Usually gold appreciates when there are periods of uncertainty. So there is the possibility that institutions, now that the stock market has corrected, have started again accumulating longs on gold. And we can see this with this strong rejection to the upside following that stock market crash. And the level that we have to, that I will be paying close attention to is this one here. This is the previous level of daily resistance that after the market broke it to the upside was turned support. And after the break to the downside, this level is currently acting as resistance. Now, until the market will remain below this level, this market can easily continue lower. However, if the market will manage to break above this resistance, that is where things get interesting, because after a break, the monthly, weekly, and daily timeframes would all be aligning for a potential push higher, and also the COT data is already showing that in the long term, institutions are very bullish. So a break above, after the break on the retest of the previous resistance turn support, that is where there is good probability to see more institutional longing for a potential rejection to the upside. So if the market will break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education analysis that you see me share online is just the tip of the iceberg. If you want to learn more, I really suggest that you head over to the link in description, which will bring you to the website in which you have the possibility to gain access to the best trading program on the planet. Here, you will learn and gain access to all my courses. So from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 language, building portfolios of strategies and optimizing them with tools like the Quant Analyzer, and much more. You also have the possibility to gain access to the Trading Station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which you very often see me use on my free analysis. You also have the possibility, if you want to join the integrations, so you gain access to all my personally developed EAs. You see them here presented directly on the website. You also have the possibility to gain access to the live trading show. So essentially a live stream of all trades coming directly from my account as they're open, closed, and managed. And if you scroll down, you will see that after the testimonials for the current time slot, there is still some time to join with the special. So essentially, you have the possibility for still around 3 days to gain access with the discounted price directly from the website and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out. The link is in description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.